Good morning, everyone. As you come in, we're just letting everyone in from the waiting room. So it'll take a minute for technology to catch up. So welcome all. Again, as I always say, I'd like to reward those who are on time. So welcome and thank you all for coming and joining us today. It's a real treat for us today to have Jeannie joining us. And I'll go through a bit of a more detailed introduction with her in just a moment, but thank you for coming along, Jeannie. As I normally give a little bit of an update on what's going on in the industry, there really isn't a lot of change that's going on nationally from an insolvency point of view. I think, most of you who look at whatever news feeds you do will see that there are a lot more insolvencies hitting the press. And what you see in the press is probably about 1% of what's actually going on. So that will give you an idea of just how quick things are starting to pick up in terms of businesses starting to fall over, never alone looking at the more global impact where we're starting to see the big banks. We had a big bank go down last week in America. Credit Suisse is now on the ropes by the look of some of the press releases today. So there's certainly a lot of pressure in the local market. The pressure is certainly heating up, but I won't go into it in any more detail apart from that today. But certainly no new law changes or anything exciting like that. Just the pressure, I think, is mounting. But what I want to do today is focus on our guest speaker. Very lucky to grab her. She needs to jump in a car shortly after this to get up to Noosa for the IPA conference. And I think she's doing a tour around Australia with IPA. So to grab Jeannie is certainly wonderful for us. So as a bit of an intro, Jeannie is the last year's winner of Women in Finance Australia Bookkeeper of the Year. And Jeannie's been a bookkeeper in practice for over 13 years and now currently operates 3 brands servicing the SME and the accounting industry. Those brands is her bookkeeping practice, which is Cloud9 Strategic, her academy and podcast, which serves SMEs, which is Better in Business Global, and her education and coaching platform, which is serving the accounting industry, is called the Strategic Bookkeeper Global. Jeannie today is going to be talking with us on her recent book release, which is the 7 Deadly Cashflow Sins. Which she provides to SMEs as a how-to guide in an ebook format under the Better in Business brand. The 7 Deadly Cashflow Sins has been written for SMEs to use as a step-by-step guide to improve their cash flow and also promote using their numbers in a strategic way in order to optimize their business performance. We will at the end of, it'll come in an email afterwards. Jeannie has got a number of free resources that she's going to make available to everyone today that we will send out via an email with links that you will be able to get access to those resources. So after all of that, welcome, Jeannie. Thank you for coming along and joining us today.
And thank you for having me.
So I guess as a bit of an intro from my perspective and why we're so excited to have you on, Jeannie, is that, most of our listeners are accountants and financial planners, bookkeepers and lawyers. And a lot of what we're going to talk about today for them is going to be very basic info, like talking about the different cash flow things, the things that they would know. And I think you used a really good example yesterday is that for us as advisors, we're at the university level of understanding what cash flow is, what it really means, what the good and bad points are of it. But a lot of our clients are really at the kindergarten level. They might be university level as an electrician or a plumber or whatever business they're in. But in terms of actual financial management and financial cash flow, they're really at the kindergarten level. So a lot of the topics that I found when I read your book, and I think I've read it 2 or 3 times now because I'm using a lot of your examples when I'm talking to clients that are in trouble. But for you, what was your motivation originally in actually wanting to put this book together? Because I know writing a book is not fun.
Yeah. So there was a couple of motivations. So I decided a few years ago that I would jump in and do a bit of future proofing in the business. And it was timing because the pandemic hit and everything changed. And so one of the things I decided to do was lean into developing really great content to fill up my product ladder with, which I talk about a bit in the Strategic Bookkeeper. And I did a blog called I'm a copywriter myself, and I did a blog called The 7 Deadly Cashflow Sins. I ended up guesting on podcasts, and everybody went wild for it. And so I thought this would make a perfect little ebook to be able to give to prospective clients and clients in order to help them digest my content, get to know, like, and trust me digitally, and allow them to self-assess their need to work with me around bookkeeping, or if they were already an existing VIP, to step up and work with me around strategic bookkeeping. So there was the first reason was like, as what I like to call a welcome line, which is rung 2 on the product ladder. And of course, the next reason was to educate business owners and help them do better in business.
Awesome. Well, and I've got to say, I think it's a really valuable read, and I think when people have access to it, they'll be able to see how it can be really useful in trying to get their clients to understand a lot of stuff. So we'll get stuck into your 7 deadly sins, and I liked your use of your acronym, Serpico, which for some of us with grey hair will know as the name of a movie from a long time ago as well. So the 7 areas that I guess that you focus on is sales, expenses, receivables, payables, inventory, cash, and owner's drawings. Now, I think in past webinars, I think all of these have come up as conversation points for us as issues for people who are in financial distress. But let's start with sales, and we were only actually talking about this. Hank and I were talking about sales last month, from the perspective that there are a lot of people who are taking on sales that are actually probably losing the money because they don't really understand it. And I think getting that wrong is really dangerous. But from your point of view, do you want to talk about why you think that's one of your number one deadly sins?
Yeah, so I work with clients strategically in this area every day of the week. Just yesterday, massive conversation again, 2-hour strategy session, do less sales, make more profit, right? So it's the deadly sin is, there's a lot of parts to it, but one of the main parts is just focusing on sales and revenue as the main thing. So as accountants, definitely the accountants in the room and the bookkeepers in the room may relate to the bottom-up approach that is talked about in the wonderful book called Profit First. So we need to have our eyes on the net profit, right? We also know that turnover is vanity. Yeah, profit is sanity, cash is king. So all of these things packaged up into this sin, which is, if you think that it's all about the sale, you'll go broke doing business. And my father, one of Australia's most successful entrepreneurs, he used to say, we call it going broke doing business, darling. Sales, sales, sales. And either I don't collect the money after I make the sale. We all know how massive that one is. But also cost of sales. And on that, when we're talking client, I just want to say that story selling. So what I just said is actually less relevant than saying, okay, recently I had a client turning over $4 million a year, making zero profit, going backwards, brink of bankruptcy. So how did I take him from 0 to 80 grand a month in a period of 6 months of blood, sweat and tears, reducing his sales? Stop doing work that is not profitable. And it was a new habit. So it's story selling, and I just helped a business go 76% increase in net profit over 2 years. He regulated capacity with price. So again, that means he wasn't afraid to lose. So he's doubled his prices now. He's struggling to drop any work off. But once again, story selling, so that the business owners, because they will say, what's cost of sales? Sorry, you know what? They know what revenue is, but that's it. So that's the sales one.
Yeah, and I think that like at the moment it's more relevant than ever. There, particularly, we're seeing it in the building industry where people are just buying another contract to get the next job in, to get the first deposit. And unfortunately, mum and dads are really suffering that have bought houses or bought contracts to build houses, and people have bought that cash flow, but it's not profitable. So all it is kicking the can down the road. And I think you made a comment in the book that you're buying your sales to pay immediate costs rather than sales for all costs. You're trying to.
Yes.
But having the guts to say no to a job as a business owner is really, really tricky. A lot of accountants will talk about, I've had many of them going, we've just got too much work. We're going to increase our prices 30% and we'll drop it off, and then no one goes away. I think getting a client to understand that that's okay is actually really, really tricky. But you're right, the storytelling and getting people to understand not to do it and not to take on a sale that's going to lose money is critical. So, and we see it all the time. We see it all the time in our businesses that, we've got all this revenue coming in, but there's no money left at the end of the day.
And Ashley, one thing I see psychology-wise that causes this a little bit, especially in services, is that when an entrepreneur starts their business, they've usually come from a job, right? And they go, I'm going to charge twice as much. That's a maths equation. It's not a pricing strategy.
Yes.
You know what I mean? And you need a robust pricing strategy built for a business. You don't have a job anymore. And they take job mentality into the business. I've been there at the beginning of my journey. I bet heaps of people here can relate to that. But that is the psychology behind poor pricing and a maths equation as pricing versus a robust pricing strategy built for a business that has to sustain all the activities of a business. So that's really, and I've podcasted on that in the Strategic Bookkeeper, which is just being released. Our first podcast's out now, but Ashley's going to give you links to that. So a lot of what we talk about today, you can continue the journey for yourself and for your clients.
Yeah, and I think pricing strategy is a really big one that, a lot of our advisors listening can do a lot to help businesses. So that, look, let's face it, today's webinar is going to be about teaching you how to keep them away from me, but that's okay. Right, so moving into your second one, and again, it might seem pretty obvious when we talk about expenses as something that people need to keep an eye on. And again, if you look at the press, you see big companies going, we're reducing our staff by 20%. We're shutting down, the banks have been shutting down, branches everywhere to reduce their expenses. In a big company, that's pretty easy. You just go, I want to reduce this by 10% and then find a way. When you're in a small business, it's not so easy. So again, from your experience and from the book, what's your perspective and what the focus should be here on expenses?
Yeah, so I'll keep this really simple because, the book will take you no time to read, and I've got audio versions and stuff. So around expenses. Really cool,
I'll put this up. So that's
and it has really resonated. I've had a guy from South Africa catch up with me on the Zoom after reading it. These things reach, so please look at creating your own.
It's a very good cover of your ebook. Yeah.
So in terms of expenses, it's so the other reason I wrote the book, that's what it's linked to. So business owners are just neglecting bookkeeping, thinking that actually that's not as important as revenue, and then they judge their business's performance in terms of profit and cash on the bank account. Now, all the accountants in the room will go, no, but that's what they do, right? So expenses, the best thing I could tell you is the example. So if they're not looking at their expenses every month with an accountant or a strategic bookkeeper or whoever, then they're not paying attention. And in this world, so I went into a client's once, a lawyer, and I looked at their expenses, and the amount of subscriptions that were still going through the bank account that they either didn't know they were subscribed to or they weren't using. Yeah. And in my own practice, it was probably a year or two ago, and I have got hardcore cybercrime policies, and you do not cash code, right, and all this stuff. But my bookkeeper thought she was being helpful by coding off a subscription. Yeah. I didn't know I was subscribed to it. There's $2,000 down the drain. Yeah. And so more than ever, right, in this environment of click, and I didn't know it's still happening, or so there's that. And then there is the idea that we incrementally improve. So we know that successful business owners are sitting down and paying attention to their numbers. Yeah. And another story around that is I once went into a restaurant and he was like, oh, and the council had made a change and the business was just struggling terribly. It took me 15 minutes to rip $100,000 out of his bottom line. And it wasn't magic. It was somebody looking at wages as a percentage of turnover and a bleed out the bottom, right? So actually, when you pay attention to the expenses, what we always find is massive quick wins straight away, and then the incremental improvement. And the massive quick win is great, but it's the improvements over time. And 13 years ago, one of my first clients in this space, it took a year. He was losing 10 grand a month. All I did was focus on expenses. And we bought 240,000 more into his business. Yeah. So the power of just sitting down every month, looking at your expenses, making sure that you understand what you're doing. It's just so critical. And if you're not doing it, it's a deadly sin, right? But back to story selling when you're talking to your clients.
Yeah, and I think, like I know when I sit down and talk with clients who are getting closer to the edge, you look about where you can save some money. Sometimes they haven't looked at the P&L. Their profit and loss statement is something that they get once a year with their tax return, and they're more focused on whether they've got to pay tax or get a refund, not actually looking at the details. So, and again, it's that discipline that I guess we're talking about, advisors trying to get their clients to understand, and this is why I think this book is so valuable, is that it might bring them back to our advisors listening. So let's sit down once a month and let's do the numbers properly. Or if it's not within the charter, then you've got, phenomenal services like yourself that can do that tie in with the accountant very well, and make sure that happens. So the next one, and I was actually just reading an article this morning from Credit Watch about receivables. Claims on receivables have gone up by 140%. So people who can't pay their bill, who are defaulting on their payments, they're claiming it under the insurances, and claims on that insurance have gone up 140% in the last month. So I'll leave the floor to you to start with, but let's talk about receivables and why you consider that another big issue.
If there was somewhere I was ever going to start, it would be receivables. Yeah. And I think accountants can relate to it, but it's back to translating it to the business owner, right? And the one that I use here, which this business owner that reached out from South Africa said, Jeannie, when you said this, right? And what I said is, what we ideally want to do is we want to receive money from our customers before we pay anyone else. All right. That means, and if we're making a profit, it means we have the money to make the payments. Then it's like, and then you need to understand that every day that there is a gap between the money coming in and the money going out, wages, obligations, suppliers, everything, right? That is where you have a gap in cash flow that has to be funded by someone. Yeah. That, either you have to have a cash reserve or a loan, etc. But this idea that business owners really relate to it. So that we say perfect cash flow is money coming in before it flows out. Yeah. And then, because I have business owners argue with me and they say, I don't want to change my payroll to fortnightly or move my payday, but I'm not going to be able to pay wages next week. And I'm like, they can't, and JB Hi-Fi can tell you what one day of cash flow means to their managers at floor level, can tell you what one day of cash flow means to their business. So that is the key takeaway. But also just to say, come on, we know that the business failure rates are a lot around receivables. We've been with businesses that are profitable and go under because there's no cash left, because they haven't collected money from the customers, and because they're in these risky industries. We're all hearing, right, these people saying, oh, I'm not getting payment from the people that normally paid. And it's like, oh my Lord. And they're not insured. So receivables, I could tell you the kindergarten stuff, but that's, I think, the key message here, which is it actually is same as payables, but it's reversed. Yeah.
Yeah. Well, it's interesting. And in your book, you talk specifically about moving your wages to fortnightly and not be on a weekly wage cycle. So why, if you compared it from weekly to fortnightly or fortnightly through to monthly, why have you picked the fortnightly being the right number?
Yeah, well, monthly means you're paying some staff, full-time staff in advance. So fortnightly, the payroll calendar I like the most is Monday to a Sunday over a fortnight with payday on about a Thursday for a million reasons, including, as a small business owner, you've got all this breathing space to pay when things go wrong and kids get sick and blah. So what happens is, Sally or John or Peter or Paul are working for you on a Monday. Yeah. And let's say it's a service-based business. And so you realistically, for the money that you technically owe Sally on that Monday, you don't have to pay her for 2.5 weeks. So you've got a 2.5 week, expansion of that collect money. So for businesses who aren't billing in advance and collecting in advance and getting bigger deposits and really easy things that people tell me, my customers don't ever do that, and then they all do it, right? And then the business owner, Jeannie, there's more money in the bank, but I'm not more profitable. Oh, it's like magic. Do the things, do the clever things that add up to positive cash flow. And again, so what I say is, okay, with payables, we want to pay everyone as close to after we get the money. Yeah. And so extending supplier payment terms, and your staff are one of those, I get a lot of pushback. If anyone's going to make that change, I always tell my clients, please give your team 3 months notice, and then we're going to manage change management. They need 3 people on the team. I still say 3 months notice, so that we can nurture them through, because so many people leave hand to mouth.
Well, and look, there are a lot of people who, once you get into a cycle of how you get paid, they run their budgets based on that too. So if you are going to make changes, you've got to give them time to do it on that side as well. So we've pretty much combined 2 of the sins there, your payables and your receivables, about getting your money earlier, and I guess trying to pay the money as late as you possibly can. And if everyone's reading the book, then that might get a bit tricky, but we know not everyone reads the book. So, but it's, is there anything else, I guess, that we've missed in those 2 categories that you think need to be highlighted before we move on to the next one?
I don't think so. I think the key message being just, that great cash flow is receiving money before we pay, because business owners, when I say that, go, nobody's ever explained it that way. And they're like, oh, so if I get the money after, where do I get the money from, right? This is, business owners don't know what a number in bracket is. The reason I called this the 7 deadly cash flow sins when it actually relates to profit as well is because they don't know the difference between profit and cash. Yeah. So understanding our market is a really important part of this, and finding a way to convey the message, which can be in 10 different forms. Because I often hear accountants say, oh, I just don't understand why my clients don't get this stuff. So finding a way that they can get it. Yeah.
And I think that's it. I mean, most people have got their screens off, but I'm pretty certain there's going to be a lot of people going, I have a client like that, or I have a client like this. But it's certainly it. So let's move on to the next one, which is sort of tied up in that whole, your payables and your timing is inventory. Now, obviously, not all businesses have inventory, but let's again, you talk particularly about stock turn. For us, again, going back to the original analogy as uni students, We understand what stock turn is, but I can guarantee you when we sit down with a lot of business owners that I talk to, they don't understand stock turn. So let's so again, what's the priority message that we should be saying here?
Yeah, we don't deal with a lot of inventory businesses. I think 80% of SMEs are service-based, but basically stock turn is simply how quick do you turn the stock over? And do you know what it's back to? If you're paying for that stock before the customer pays you, where are you getting the money from? Yeah, this is simple stuff for simple people. And so back to story selling. So a lovely client who's had a lot of trouble in business and has been referred to Ashley. He said to me, Jeannie, it's really exciting. I've decided, I've found what I want to do. He wanted to go from hospitality to retail. And I'm like, oh my God. And then he said, but it's food retail. And the great thing is, Jeannie, that this food has a long expiry date and we can leave it on the shelf for as long as we like. And they had no cash. And I'm like, so when are you going to pay your suppliers for the food? You know, so it's like this, the business owners just, they don't understand it. And so I've found to come back to this little golden rule of, if you are paying your supplier for that stock, for that inventory, because it's sitting on the shelf for longer than you can sell it. Because the idea is that we will buy stock, we'll have, say, 30 days from end of month terms, whatever it is. We'll sell that stock within that 30 days and receive that money from the customer, which is the cash to fund. It is the cash flow to fund paying the supplier. So the minute that stock stays on the shelf longer than the supplier, then that money's got to come from somewhere and there's interest on that money and it could have been invested elsewhere, etc. And it's a big business mentality to be taken into a small business. And therein, or the other thing is that when these business owners go do this, I'm going to get some stock, I'm going to sell it. In a sec, let's take this seriously. You're now a wholesaler, or you're a retailer, or you're both, or you're an importer. So actually there's a lot going on and we need to sit down and really take it seriously so that your business dream doesn't become a nightmare. Yeah. But back to that little golden rule. So this just turning the stock over. That's what it's about. Yeah.
I remember in a previous life when I had my accounting practice, which is, going back 20 odd years ago now, I had a client who was a toy wholesaler and he could buy toys in from the manufacturers. He could sell it almost twice before he had to pay the first invoice. His lead time from when he would order, get the stock in, sell it, get paid on it before he even had to pay. There was like a 6-month lead time before he had to pay his suppliers. So everyone else was funding his sales, which was phenomenal business. Rather, he never had any issues from that point of view. So it is, if you happen to be in the right industry where it's normal, it's okay. If not, you've really got to focus and keep a look on it. Let's get into probably the one of the two. If I was to pick 3 of these 7 that brings people to us the most, it would be the sales first, getting that sales thing wrong, and then this next one being cash at bank. Again, we all think it's pretty simple. For us, we know that cash at bank is not profit, but I don't think in the SME market it's quite that clear, is it?
Yeah, no, this is probably, I personally think this one is a big contributor to the big failure rates. And it is the misconception, right? And also with that story you shared, success leaves clues. And that's why it's so important, I think, just to share stories of success and of failure so people can relate to them more than just offering information. Look, cash at bank. And this is one of the reasons I wrote the book. And if you listen to this Better in Business podcast and read the book, you'll notice that I hammer home this idea. If your books aren't up to date and accurate, that's your first job. Stop and do that. Because if that's not there, we can't see your business performance, right? Your business performance is not what's in the bank account. Actually business owners will often have a gut feel. They'll think, I know the bank's got money in it. I haven't done my books for 2 years. I've got a feeling something's going wrong. And I refer those clients to Ashley. And it's heartbreaking after I ask them if they have a family and assets. It's horrible.
Yeah.
And this is the reason. So educating, having a conversation with business owners where we say, your books need to be up to date and accurate. As accountants and bookkeepers, actually valuing that message ourselves, because I meet industry professionals who think it's okay to do the books quarterly, or that their business owner doesn't need a P&L. And I up-to-date, accurate accounting records is pillar one for the success of any business. Yeah. And we call it numbers 101. And without that, you cannot see your business performance, which we call profit and cash. And without profit and cash, your business will suffocate. Yeah. And so usually when I go into a business that's got, a little bit of money in the bank, but no books for a year, it's pretty obvious what it's going to amount to. No super paid, no BAS paid, with all the right intentions, hundreds of thousands in debt that they'll never trade out of, all because they didn't think it was so important to bring the books up to date because they've got the bank account. Yeah. So that message.
Therefore, not highlighting the fact that there was all these holes. Yeah.
What was that, Ashley?
Therefore, not highlighting the holes that were in, their pricing strategy or their sales strategy and all the other things. Yeah.
It just, without the, and again, I got accountants said to me, he says to all his clients, up-to-date, accurate accounting records, bookkeeping is pillar one for the success of any business. It's what we do with those numbers afterwards that moves the needle. But just getting business owners to value that. And so long as there are industry professionals out there saying, oh, just give me your bank statements quarterly and I'll do your financials, then unfortunately we're going to foster the misconception that we can run the business on feel and bank account. So please, we all need to come together to convey that message.
Yeah. Okay. You also, one of the things that I really liked about your cash is that profit is at the end of the line, not the start of the line. And the cash at bank is really the start of the line, isn't it? So it's a really good way of sort of explaining that, okay, you might have 100 grand in the bank, but everything else has got to come out of it first. So what's left is really more interesting than what's actually in there.
Yeah. And on that, I say to my business owners, numbers education. So we have a 5-step numbers system, right? There's numbers 101, and then there's numbers knowledge, numbers strategy, which is around your chart of accounts, numbers targets, which is like, should we be aiming for? And then numbers monitoring. Let's monitor actuals compared to targets, right? Numbers knowledge, which is number 2. So I say to my business owners, you're not going to get everything in 2 seconds. This is about starting the journey. And where you end up in 365 days with us is going to be very different to where you are today, which I call laps around the sun. And so bringing that business owner in and getting them to commit to being educated. And when we say, when accountants say, but I'm too busy, I'm just too busy with the compliance. If you love the compliance, that's great. But if you have a burning desire to empower business owners to do better in business and to thrive, it might be just worth considering that regulating capacity with price, letting go of the 20% that you don't want to work with, and just offering up those services that are kindergarten for you. Yeah. Where you just sit down and month on month, you just educate them to a point where when you hear what comes out of their mouth a year later, it's so exciting. It's like, wow. Yeah.
It's that I do a bit of softball coaching, and seeing one of your kids actually do something that you've been trying to coach and train for the last 3 or 4 months in a game, you get all excited about it. It would be very similar.
Right. Yeah.
And we shouldn't keep talking about our business owners as kindergarten kids, but really in the financial modelling world, that's where they sit, isn't it? Yeah. Most of them. Some are really. So let's move on to the one, and again, Hank and I were talking about this in light of all of the financial pressures that are coming with the recession, the cost of living going up. Business owners have got a really bad habit of they just pull out of the bank account to help fund their personal life without having any real concept, probably because they don't know their numbers as well, but also because they just, they don't want to, if I'm fighting this hard, I want to be able to live a normal life. So your seventh sin is owner's drawings. Now this in our space is a massive problem for a number of fronts because it often comes out as drawings or Div 7A loans. And in the book, as you said, it doesn't sit on the profit. It doesn't sit on the P&L. But again, let's go back to your perspective of owner's drawings before I add my piece.
Yeah, and this is definitely one that when I say to a business owner, I talk about owner drawings, when we feel on that day one, right? And I say, look, the money that you take out of the business doesn't go through the profit and loss. Their eyes glaze over, they freeze up, they look like a kindergarten child, and that you just spoke Latin to me. And in that moment and on that day, most of them will never get it. And I say, it's okay. You don't have to get it. And I even comfort them by saying, thank you. That's why I have a job, right? Yay, if you knew everything, I wouldn't have a job. I say to them a little bit like when the electrician comes to your house and does the work that he does, like, so he wires up some new lights, right? And you switch the light on and it works. I don't need you to understand how I wired the light up. What I need you to understand is there is a set of best practices here, and they are the 7 deadly sins, right? To start with, easy. Yep. They're the rules of the game. If you will join me and play by the rules of the game, we're going to win. If you want to break the rules of the game, you're going to lose. In a year's time, I suspect that you'll totally understand what we talked about today. Yeah, you don't need to if you trust me. But so we're working with a client, wonderful, still doing lots of just numbers, what we call numbers mastery to this day. And one day she said, the most impactful thing about what we have done today is that you have made me aware that we are drawing out more from the business than we are making in profit. Yeah, she said, I had no idea. Smart, savvy woman, and really, across it. And so the business owners are flawed. They have no idea that that's happening. Yeah. And it's just so important. And this is why I don't think this is a one-off thing. And it's why the book is great, because I'm getting this feedback from entrepreneurs. I had a tradie contact me just recently who tuned into the podcast. He grabbed the book and he read the book and he said, oh my goodness, this has just been amazing. And I've learned all these things, and they can digest it and they can go on a journey. Yeah. And then a year later, when they're ready and the pain is great enough, they can come to you and hopefully you can help them or refer them to Ashley, who can also help with the pain, which has been amazing for our clients. But yeah, owner drawings, this is so easy for us to understand, right? But it is an absolute massive one, and it's something that needs to be tackled, really right up there with the first things. We do one of the things we do is a numbers dive workshop, and we populate some Google Sheets. And that's, we just have a nice agenda so we can populate all that stuff, and sets the tone for working with the clients on a monthly basis to do, whether you call it virtual CFO. They don't know what virtual CFO means, but it's very meaningful to me. But it's important to educate them on that too. Numbers mastery, numbers meeting, whatever you call it. But yeah, so critically important.
And I think, as I say, Hank brought it up last month, and it's something that I think we're going to see a lot of, because if they do get further into trouble, those owners' drawings become a real issue in an insolvent situation as well, because they often end up becoming loan accounts, and they're not in there the right way, and clients just don't get it until it's too late. So Look, we're just about out of time. I did want to allow some time for anyone who may have a question or two to put into the chat. So while if they're like me, it'll take time to type and to chat and to type and to do that. So to sort of wrap up while we're waiting, if there are any questions it's an open-ended question, Jeannie. But is there anything that, any final message, I guess, that you think is, from what you're dealing with at the moment, what the economy is like, that you'd like to send out to our advisors, or something you'd like to say to finish off as we wrap up?
Yeah, look, definitely. I'd love to encourage progress over perfection. I also call it prolific, not perfect. So as accountants and bookkeepers and maybe even lawyers, we are not always comfortable with not having all the answers, and we want to have perfect processes. You guys know this stuff. So if you're stuck in compliance, then in order to help your clients trust you, they really look up to accountants. Even if you're not going to be able to help everyone one-on-one, if you've got just a little bit of time where you can even offer up some group help, where everybody comes into Zoom, they open up their books, and you just talk through the 7 deadly sins. You don't have to use my book. If you offer bookkeeping and you don't want to put my name to things, you've still got the resource. Because if you can help one person along the way to start to value that stuff, so progress over perfection. You know what you're doing. Develop the system as you're doing it if you need to, but get out there and help people with this kind of stuff.
Thank you. I think for everyone, you've either been we've either given them way too much to be able to come up with a question, or you've done too good a job explaining yourself for the moment. But I think for me, I guess a couple of the things that I really said, one, I took out the book, and I've even further from today, I think for people, and particularly in this current environment, making sure pricing strategy is right. I think, the costs of everything have gone up. So making sure that your clients have got their pricing strategy right. I think I'll certainly do a bit more of a deep dive into subscriptions to make sure that, because you end up signing up to all sorts of things, and sometimes you forget that you're not using them as much as well. Are two big things that I'll take away, and I think we should all be looking at. But look, I guess for all of our people listening, one of the things that I'm really excited about having Jeannie on is that this is about helping you connect with your clients, because we see it all the time that they don't understand. Sometimes we get the comments going, the accountant never told me that. Whether it's right or wrong, over the last 15 years that I've been in this pre-insolvency game, clients will always go, my accountant should have told me about that. Now, it's not the accountant's responsibility, but you guys get labelled with it to a large extent. And so having an idea of where some of these holes are, how you can use that for your own business to grow your business, connect with Jeannie, that I'll leave that in your capable hands. But so thank you all again for attending. If you need Jeannie's contact details before next week, when our emails come out with all of the details, please reach out to me or to the office, and we can get them to you much quicker. Otherwise, you will all receive an email next week with the connections to her podcasts. Please do look up Better in Business podcast. They're an awesome podcast. You can get that on Apple Play or Google Play or all those different mediums that they're there. And we'll give you all the links. So, Jeannie, thank you. Enjoy the drive to Noosa. Enjoy a night in Noosa before you have to talk again. And thank you very much for giving us your time.